Well, hello everyone, this is CJ with Cyclotron. Well, today I want to talk about whether Harley Davidson's at risk for falling into bankruptcy here with everything that's going on in the economy, what's going on with the motorcycle market in general. So I'm going to go over what's been happening in general that may lead someone to think that could be a possibility. I'll get into some specifics so you can see an argument either way for how this might occur. So let's get started. First of all, Harley Davidson stock's been pretty well hammered since the beginning of the year. It's down about 10%, and most of that decline has been since February. And perhaps surprisingly or unsurprisingly, depending on your perspective, it seems to be tied to the current banking crisis that's going on here in the U.S. and worldwide for that matter. Now, of course, you've heard a lot about the bank failures in the news. Regional banks have really been hammered, those with lower capitalizations, with exposures, with depositors that have more than the federally insured amounts, who may be nervous that they won't be able to get their money later. So they're drawing their accounts down, moving them to other locations, other banks. A lot of money is moving to bigger banks. So the downward trend in Harley stock started before the banking crisis, more or less, but it just seems to have been accelerated since that time. Here's an interesting article in Barron's, and explains why Harley Davidson stock is acting like a bank stock. Well, I'm sure many of you know that Harley Davidson operates a financial services division, which is a big part of their business operation in terms of revenue and profit, and it also enables them to secure financing for people who otherwise wouldn't be able to buy their motorcycles. So it's an important component to how they do business. Now let's just touch briefly on what started all this. As compared to what happened in 2008, 2009, that was a liquidity crunch. People who needed money to expand their business operations just couldn't get the money at any rate. A lot of lenders just pulled back, didn't have the funds available to loan to people. This time around, a lot of people took money, a lot of institutions and companies took money and put it into long-term government bonds. And because the Federal Reserve is actively combating inflation, they've raised interest rates such that short-term Treasury rates, say 3-month, 2-year, even 5-year, are paying at a higher interest rate than the 10 and 30-year bonds. So that's what you call an inverted yield curve. Now, if you get into more how Harley's like a bank and compare them to other manufacturers, Harley's got about $8 billion in outstanding loans. Compare that to Ford, which is about $140 billion. So a lot smaller size, but in terms of the amount of revenue for each company, it's very significant for Harley Davidson. In fact, Harley Davidson generates 35% of its operating profit as of last year from their lending operation through Eagle Mark Bank, which is owned by Harley Davidson Financial Services. So it's a big deal to them. So you compare that to, say, GM, their financing accounted for only 19% of their operating profit. So the other concerning thing about the yield curve is not only what it does to people who have large holdings in long-term government debt, but it's also a strong indication of a likely recession. So the last recession here in the United States, 2008, 2009, it was really a global recession. Here we are 13, 14 years later, haven't had a real recession since, aside from a couple of years ago with what was going on. That was certainly an unusual circumstance, but it wasn't a broad economic recession. And modern economies have those periodically. And the Fed has pumped a lot of money into the economy to avoid a recession. Now most people think they're likely to trigger a recession, and this inverted yield curve, more often than not, is an independent indicator that that's going to happen. It's both a symptom and a cause, as it were. So let's go back to Harley Davidson. They were in real trouble in 2009 during the recession because a lot of people couldn't get loans, a lot of people lost their jobs. People who could buy a motorcycle maybe thought it's not such a good idea to buy one. So Harley's motorcycle shipments peaked in 2006 at 350,000 motorcycles. For last year in 2022, Harley Davidson sold around 180,000 motorcycles. So you go back during the recession, the last recession, 2008, 2009, their sales got down to around 200,000 bikes a year, which isn't much more than where they're at right now. But they were in real trouble at that time. And also, with declining sales for Harley Davidson, it's reflected in the fact that their market share has continued to decline here in the United States. If you look at the 600cc plus motorcycle segment, Harley used to have nearly 60% not that long ago of the market. Now it's down to 41%. So as a result, Harley Davidson is trying to make more profit from a fewer number of motorcycles sold each year, such that they're estimating a roughly $3,700 in profit for every motorcycle sold, which is a lot of money. I mean, that's probably well over 10% if you look at their average motorcycle price. Okay, so what else happened with Harley Davidson during the last recession? Well, their loan defaults increased to about 4%. Currently, Harley Davidson finances about 2/3 of the motorcycle purchases. And most of those finance loans are coming from their Harley Davidson Financial Services division. When a recession starts to approach, loan defaults increase, which is what has happened here recently. If you look at just maybe even 6-8 months ago or a year, their loan defaults were a little over 1%. Now they're pushing 2%. So they're trending up to that historic high of around 4% during the last recession. So that's not good for Harley Davidson. So I mentioned Harley was in real trouble during the last recession, so much so, and I didn't realize this till some of you pointed it out to me here not that long ago. Warren Buffett came in and loaned Harley Davidson $300 million, and an associate did as well. So they loaned Harley $600 million at 15% annual percentage rate for 5 years. I mean, Buffett alone made $150 million by loaning them $300 million. So he felt pretty strongly that Harley wasn't going to go out of business, but he wasn't so sure that he was actually going to take equity in the company. So I think he was looking at covering his bets, as it were, so that he could probably generate some pretty strong interest income that would cover most of his principal, even if they declared bankruptcy a year or two later. That's what occurs to me here. But Harley bounced back pretty quickly, and in fact, they wanted to pay off their loan sooner, and Buffett says, "Nah, we're good. We'll let you pay 15% over the full 5-year term." So as we know, Harley Davidson's trying to become a luxury brand. I mean, how do companies deal with recessions? Well, it turns out that luxury brands actually do pretty well during a recession, because recessions tend to favor people who are already making a lot of money just by how they're tied in with the economy, as opposed to people who are kind of living paycheck to paycheck and may be at risk or have been laid off because unemployment trends upwards during a recession. So that's tough. You know, Harley can't make all their money by selling to rich people. There's just not enough people out there. In fact, if you look at this applies to a lot of things, but there's 3 types of customers from a financial standpoint. You've got the people who are extremely well off. They could walk in and pay cash for anything they want. They make considerably more money than what they're spending for a motorcycle or other discretionary purchase. Then you've got people who have good income and they're living within their means, and they can afford to buy something on credit. They can cover the payments every month. They're pretty secure with their job. And then you have people, the subprime borrowers, as it were. They may not have good credit. The amount that they're borrowing may be extremely high relative to their income. They may have defaults or late payments in their credit history. So these are folks that if they still want to buy a Harley Davidson, Harley has to get pretty creative, and they do, and they'll focus on the monthly payment, getting it down low enough so that these people can swing it. So how do they do that? They'll have really high interest rates, probably at this point well over 10%. They'll extend financing to 8-9 years. So they're doing a lot to get people into these motorcycles. So again, if you're looking at a recession, people that, even with creative financing, may find it hard to keep up with their payments, particularly since inflation's still triple what the Fed wants it to be at 6% versus 2%. So you have people who have to spend their money on other things. Even if they've got a Harley payment, the other things are going to have to take a priority, like food and rent and so on, or even their car payment. Then you've got the people who have good jobs, but maybe they're worried that their company may cut back a little bit, and they may be one of the people that are laid off. So even though they have a good job, they're worried enough that they're not going to chunk down a bunch of money on a new motorcycle. So that's 2 out of the 3 groups from a financial standpoint as a motorcycle customer. So that leaves the rich folks. And I don't think there's enough rich folks buying motorcycles to keep Harley afloat, but we'll see. So I'd be curious about your thoughts on this topic. Have you noticed that there's a lot of inventory stacking up, new inventory at the local Harley dealer near you? It seems to be the case near me. And as I mentioned, Harley's trying to keep their unit profit up really high. So haven't seen any discounting yet. They're still selling above MSRP based on my experience. So it looks like Harley's going to ride this out in their dealers as long as possible. But if the recession fangs start to bite more, as I think they are, you could start seeing Harley being in real trouble. So right now, Harley's done a good job paying down their debt. It was near $7 billion not that long ago, back in 2020, because it went up during that time period due to a variety of reasons. They've got it down to about $4 billion, but that's still about 2 times their shareholders' equity. So better position than they were before, but not great in a rising interest rate environment. So again, let me know your thoughts on this, and please stay tuned for future videos. Thanks very much.